Can you hear me guys now? All right. All right, cool. All right, well, I think we'll go ahead and get started. So, cool. So basically, we wanted to come up with new ways to reach both existing clients and create some content for anyone who's interested. So that's why this is a public stream. And of course, if you guys have any feedback on what you guys want us to cover here, or if there's other mediums in which you want us to communicate, please let us know in Discord. We'll be happy to take that feedback. But basically, I wanted to take just 15 minutes or so, and then I'll take questions at the end or during. You can type them. I can see them both in Twitch and Discord. We want to go over basically some of the changes that we made as a company over the past. Jimmy's collecting questions in the chat as well. So basically, we wanted to go over some of the changes we made over the past year or so, and go over also some of the changes that I think are going to be good for GPU miners going into 2019, and then also talk about a new coin, a new algorithm that's actually just recently released that I want to let everyone know about. So first things first, we announced a new panel. I want to say a few months ago. It looks a lot like this. And if you don't have your link for this, please tell Jimmy or me in the Discord that you have not had a link to this, and we'll get you a link and we'll send you your specific rigs information. So basically, I just want to walk through this panel, make sure everyone knows what's going on it. So basically, we wanted to have the freedom to move chase profits, whether that's on any pool that we can find. We wanted to give you the statistics on this panel. And when we were chasing profits, we were giving people new pages, and it was confusing. So this is our first real way to aggregate data on the farm side, and we're going to be adding new things to this over time. One of the things that we're looking to add is basically this. I have a screenshot here. So let's say we'll give you over the past 30 days, or the duration of your contract. We want to give you these statistics. We want to give you uptime. We want to give you what you've been mining. We want to give you historical payout data. This is basically what we have on our side. We want to push this data over to the panel. So this is something that we're going to be working on over the next few months. But I'll just go over what we have currently on the panel and show you what we have currently for also pool side statistics. So basically, you can see here, everyone should have access to this. Like I said, if you don't, please send us a message and we'll get you fixed. You can actually click on the rigs themselves. So we'll click on this one here, and it will give you what it's mining, where it's mining, per GPU statistics as well. And you can get really granular with the data here. So that's the panel. In addition to this, right now, we are currently supporting Zpool and MiningPoolHub. We had MiningPoolHub the entire time. Zpool we just recently added, and we just dropped what were the other ones? Blockmaster and a hash pool. So if you click on your Zpool, if you want to get your pool side statistics for Zpool, you put your wallet address at the top here, the one that you gave us, and it's going to give you a page like this. And this gives you not just temperature and duration and things like that. It's going to give you what you're actually mining on this pool. And some of these things are things that I've never heard of, but you're not actually exposed to them. You mine them, you sell them instantly, and you get paid in Bitcoin on this pool, or you get paid on your preferred token on MiningPoolHub. Most of these profit switching pools only support Bitcoin as a payout, which is why we asked for Bitcoin addresses earlier in the year. So you can see here, oh, can't scroll all of a sudden. There we go. So you can see here what this rig was earning, what the last payouts were, including the transaction ID. This is a link to the blockchain, Bitcoin Blockchain Explorer, your balance chart, what coins are still sitting either in exchanges or mined currently, as well as what algorithms were you mining down here at the bottom. So again, this is the kind of data that we want to put all on the panel, and we're working towards that in addition to the historical information. So, and then the last one we have is, I'm sure everyone's seen this page. This is MiningPoolHub. This will give you past 2 weeks of data, what you've been mining, and then also you'll see here what your balances are on this pool, and so on and so forth. So um, we wanted to give, again, we're trying to aggregate all this data into one coherent location, but for now, we've got these 3 different places where you guys can look and make sure that your rigs are online and mining. And again, if you don't have access to this first link, please, we need to get you set up on that. This is where everything's going to continue to grow. All right, so that's basically what we've changed over the past couple years. We've continually tried to add as many algorithms as possible, so I don't have to sit and monitor what's happening in the market every day. And there's thousands of different coins that occur. We're exposed to it. We're basically having a computer monitor all of these things. So moving forward, I said that in GPU mining, I think in the next year and beyond, I think it actually looks good for us for a number of reasons. The first one being Zcash and Equihash basically had ASICs. Well, a lot of these are ASIC related. So ASICs were developed and designed because we saw that massive run up in price over the past year. They were designed for some of these coins faster than developers could really come up with countermeasures to them. And I think a lot of developers, not all projects feel this way, but I'm very anti-ASIC. I take a very anti-ASIC stance. The company takes a very anti-ASIC stance. We saw things like Vertcoin, because of ASICs, had a big double spend issue. Where there was a 300 block reorganization during last year where someone actually went back and double spent some coins. That's ASICs. If you have so much hash rate where you can control where coins are going, you can over 51%, you can start to do these things. So when ASICs drive up the hash rate to an extent where one person can have 51% for a number of blocks, that's a problem. So not only that, you have ASIC manufacturers basically taking profits from GPU miners like ourselves and fabbing these chips, and they mine on them themselves. And then in a 6 months or so, when they determine that they can make more money selling it than these rigs would ever make in return because the difficulty is going up so much as a result of their ASICs, they sell these rigs. So when I say that they're extracting profits from miners, they're doing it in a I think a very backhanded way, and I firmly believe that most ASIC owners will never ROI because it's not in their business interest to sell you a miner when they can make more money on mining that themselves. So with that being said, Zcash has announced recently that they are coming up with a dual algorithm system. These already exist. We saw it in Myriad Coin and Digibyte. There's 5 algorithms that are mining concurrently, some ASIC driven, some GPU driven, and Zcash is going to support both GPUs and ASICs. There's a lot of Equihash coins that a lot of them have gone in different ways. Zhash, which is Bitcoin Gold, has forked off and kept their algorithm GPU based, and Zcash has basically agreed that there are some pro arguments to be made for ASICs and some pro arguments made for GPUs, and they think that decentralizing their hash rate with 2 different algorithms is the way to go. So we'll be watching that. That opens up a revenue for mining for clients that have GPUs. Another one is Vertcoin and Verthash. A lot of you were mining Vertcoin a few months ago. I mentioned earlier, ASICs come out for Vertcoin. The devs basically have announced a fork that they're changing the algorithm, and they have a even larger change down the road where they're going to fork off all these ASICs, and that will become another source of income for GPU miners. So you may not immediately all switch over to Vertcoin, but what it does is it distributes basically creates more opportunities where basically the GPU miners are going to be spread along more coins, and that basically increases the profitability of coins across the board. So that's 2 big projects that are actively forking off ASICs. The third one is Monero. They're on the 8th version of their algorithm. They just fork every 6 months. I think it's every 6 months, regardless of whether or not ASICs are on their network, because that ensures that there's no incentive to create ASICs. So it's 3 big projects that we have mined in the past or are currently mining that are basically committed to keeping ASICs off their network, which is awesome. Ethereum has also seen ASICs. Ooh, that's my cat. Excuse me. Sorry, buddy, can't do that. Ethereum also had ASICs designed for them this year. However, the jump in efficiency is 20%, 30%. It's not the 10x, 100x we're seeing in Zcash or with Bitcoin ASICs. So there's been a push to switch Ethereum over to programmatic proof of work, or ProgPoW. That's still being discussed. We don't know what's going to happen with that, but we do know Ethereum is switching to a proof of stake system next year sometime. So there's really only a small window in which that would be relevant. But again, those three earlier projects, in addition to this project I'll mention at the end, I think are going to create enough revenues, streams of revenue for people to make the GPU mining profitable. The next big thing I want to talk about, and I like to bring up Ethereum because it's the most relevant to us, is a couple of charts. So the first one is I like to talk about, where is it? It is the wallet address growth chart. So a lot of people make the argument that the more addresses that you add equates to more people joining the network. Now there could be various softwares just creating addresses over the course of time, but we're still seeing 60,000, 70,000 new Ethereum addresses created per day, which can be argued, and a lot of people are making this argument that means that there are new users coming into the system. So the health of the Ethereum network is still very strong, even if the price is not reflecting it. There's other metrics that you can look at to see how healthy a crypto network is other than price. In fact, I don't think price is indicative really at all. And this is a really cool website, etherscan.io. Another one is bidinfocharts.com. They'll give you a lot of these network statistics that can be used to see how the health of a network, how a network is performing. Two charts I want to show side by side also is the hash rate and the price. So basically the mantra in GPU mining, or really mining in general, is that hash rate follows price. So you can see here that the hash rate started to go up right around when the price started to go up, a little bit after. A little bit after. So basically what we're seeing is during this run up, a lot of the mining was lucrative because the people mining Ethereum, they couldn't create the infrastructure faster than the price was moving up. So you were able to earn more Ethereum. It was the incentive to create more rigs and join the network was very high. So right now we're seeing the exact opposite, where the price fell so fast, the difficulty is falling slower. So the difficulty is basically much higher than the price would dictate. So it's not a good time to be mining. However, because this difficulty is heading down, you can see the downward trajectory. This means that difficulty is loosening up. A lot of people are turning off their rigs, which means there's a finite supply of Ethereum coming out throughout the course of its lifetime. So the fewer people that are mining, the more Ethereum you're going to be earning over time. And I think that this downward trajectory, this difficulty, is going to reach a level where it's going to be profitable to mine Ethereum at this price. And I think it's going to be another month or two. We're going to start to see this down and then level off. And I'm already seeing more Ethereum per rig being mined right now. However, that looks bad when we look at it in terms of US dollars. But I think this is a blessing in disguise if we're looking at the long-term trajectory of crypto, that you're earning more Ethereum and that I think the price will be higher in a few years. I always try to position this as a long-term investment, and I think that this is potentially a blessing in disguise that this price has fallen this low because it loosens up difficulty. It allows you to earn more Ethereum with the same hardware. So that being said, so I think those are my market comments in general. The last thing that I wanted to talk about was a new token, a new cryptocurrency. It had its ICO last year, and it was the co-founder of Ethereum has started this, and basically this is called Aeternity. It just launched like a month ago or so. Completely new algorithm. A lot of the tools surrounding this algorithm are in their infancy or not yet created. So you don't have the tools that a mature mining system like Ethereum would have. But the company was able to devise a way to mine it, and we are offering mining for Force users or Force owners. There is no AMD miner currently, or the Armada side of things. So we do have a way to mine this. I recommend that you do mine this. I think this is going to be a competitor of Ethereum. It has a smart contract platform. Its mining is RAM bound, meaning that if you have a cell phone with RAM, it will earn about linearly what a GPU with the same amount of RAM would earn, and that decentralizes mining across the world, which is the whole goal, I think, of cryptocurrency. Because if the guy in Kenya can't access financial services, what's the point? The blockchain is about access to global financial services, and I think this does a great job, or takes that next step to ensuring that we have third world and developing countries being able to use the blockchain and participate in global commerce. So you can read about it at their website, Aeternity.com. We just have just started supporting Eternity mining. However, it does take you off of the profit switcher. It's a strictly Eternity mining thing. We don't have a way to incorporate that into the profit switcher currently, but we can get you mining on that, and you will get a new mining page with just Eternity mining once you elect to make that decision. So with that, I think that's all I had for everyone. About 20 minutes. I'm about 5 over what I wanted to hit. So if you guys have any questions, hit us in the Twitch chat, hit us in the Discord. Um, and of course, if you need to reach me or Jimmy, you guys have our emails, or you have ways to contact us. And I hope that this is the first of many live streams that we do. And of course, if you guys have something that you want us to talk about, please let us know. We love feedback. We're trying to find ways to reach you guys, be it through email, blog posts, and now live stream. So hit us with any ideas that you got to keep the lines of communication open. So if anyone has any questions, now's the time. If not, thanks for coming by. Be sure to make sure you get that link to the panel. And if you want to sign up for Eternity Mining, I'm happy to set that up for you. All right. Oh, and this, of course, difficulty chart we saw in Ethereum. This is the Eternity difficulty chart. Still in the very, very early stages here. So you're earning, a lot of Eternity. However, the price is around 30 cents or so each. You're earning quite a few a day. And this is a way to get in on the ground floor. We had a blog post. Oh, geez. One of the first ones that we did, maybe close to a year ago, talking about the lifespan of coins and the how it's most lucrative to get involved when the difficulty is low, because you want to earn more tokens. The price is irrelevant then. The price will be relevant later, which is another reason why we don't want people to be taking money out of their revenue streams in order to pay their costs. Because when it's a lot more fun to have your revenue stream go up in value versus just your profit margin. So I don't think I have any questions. So I guess I'll sign off. Thanks for joining us, guys. Hit us in Discord or shoot us an email if you're interested in Eternity mining. We'll continue working for you guys and get through this bear market. So thanks a lot, guys.